We spoke about the banking system last time. You've been going further down this rabbit hole, right?
Yeah, I've been digging deeper into it. I think for perspective, the last thing we were talking about was a lot more theoretical.
Yeah.
Which I was like, this is where you kind of need to start, and then you can start building more into practical applications. Now I'm digging more into the practical side of it, and still a lot of theory. This is obviously like very prospective, and I'm assuming quite a bit about the future. But also, what I'll say is that I think when you get into the practical side of it, I think 2023, 2024. There's a lot of this stuff is actually going to start to emerge. And that's what makes this really interesting. I think it's actually pretty near term when we have new protocols that are being built, like going back to Nostr too. I think some of these other protocols that are going to be leveraging Bitcoin in some form, and they're not financial applications or anything, potentially could be. It's just a network system. But some of these things that people are using, I think there's a lot of interesting things that are on the horizon in terms of like layers on top of Bitcoin and peer-to-peer technologies that, there's some cool stuff coming up. But that being said, a lot of the stuff still, and what I've been reading into is still kind of based on at least like 10 years, and then some things like 40 years, who knows what.
Right. And so if we had to kind of crystallize this for the listeners, how would you explain what it is you're trying to figure out here? Like, what's the kind of the kind of like elevator.
Yeah. So like, here's why this is important to me. So like when I jumped into this industry, I was working in traditional finance, and then it got to a certain point where I understood, number one, I had to understand Bitcoin well enough. And number two, I realized, oh, this thing actually can't really be stopped at this point. Like, it's spread too far. And once I got to that point, I was like, the risk changes significantly in your mind. And you're kind of like, okay, if this thing's going to go, then where is it going to go? And I think that now Bitcoin's going to end up somewhere between, this idea of like digital gold 2.0 online. That's probably like around my worst case scenario. There's nuance to it, but generally speaking. And then at the other end of the spectrum, we have a apolitical global monetary system that could emerge. And that's like best case scenario.
So in that worst case scenario, you believe that it will sit alongside fiat currencies, potentially CBDCs.
Right. It sits as like a store of value in some form. Maybe the East starts to adopt it for trade, and there's centralized functions that are bottlenecking its use as like a freedom money. But on the whole, it's still like achieve the market size of gold or comparable to, and that's good. That's good for Bitcoin in a lot of ways, but it's not what I'm here for. I'm here for the other end of the spectrum, apolitical global monetary system that enables freedom within society and reduces, the power of governments across the world. So like, I think that a lot of these technologies that are starting to emerge today are going to be pivotal in us getting to that other end of the spectrum of, we have an alternative financial system here. And that needs to be built out in the right ways. And there's a lot of missteps that I think can happen along the road in terms of centralization, in terms of, custodial operations, in terms of the ability for a government to, keep it as just like a reserve asset. But that's really what I think is interesting, and what I think is really important to understand about this, because like right now we're looking at an $800 trillion market of global assets, or, somewhere around there, and a $500 billion market size of Bitcoin. And the question kind of becomes, how much of global assets will it consume? And, also a big piece of that is, how much will credit exist? Because, not perfectly true. There's a variety of ways credit can emerge, but depending on how credit emerges, it could actually offset the amount of like market capture that Bitcoin has over time. So I think that, that's a really important question. Like, for people listening that are thinking about what's the price of Bitcoin going to be in 100 years, well, how the banking system around it builds out will impact that pretty significantly. If we had some sort of like fractional reserve system, and, this is just hypothetical, I don't think this is going to happen, but if we had like a fractional reserve system and credit was still like very prevalent, that could cut 50% of the market size. If you think about the world as like a big balance sheet of assets that are being created, if there's no credit in the world, then Bitcoin would represent all those assets. But depending on how that credit comes out, it could actually be used as an alternative form of money, which means Bitcoin's market size is smaller by that degree. So I think, I just think it's really, really big question. And I think that there's a lot of technologies that are emerging that are going to be impacting this kind of in the near term.
Why do you think we could end up in a world of no credit?
I don't think that's true. I'm just like using extremes to make the example.
But that's like people speculate like maybe Bitcoin would have hit 100K if it wasn't for FTX. It's like the same thing, but on a larger scale, right?
Yeah, it's not like I wouldn't call it as much like the same thing because it's
not fraudulent.
Yeah, it's not like fraudulent. There's this kind of goes back to our last episode, but hypothetically, if we have a free banking system emerge, and free banking is associated with the concept of fractional reserve banking, so it's really more like if we have a fractional reserve system emerge on top of Bitcoin, I number one don't think that's like the end of the world. It's not what I think is ideal, nor do I think it's like a certainty. There's a lot of people that I think is. I was on George Gammon's podcast, and he's kind of like a big advocate of that and thinks that that would be the case. I think that there's a lot of unique properties of the technologies and some of these emerging protocols that could actually regulate that system so efficiently that it's very hard to run a fractional reserve institution, in which case it'd be much more like a full reserve system. So if we're in a full reserve system, then there's still ways that like credit will be emerging. Credit still has a valuable function, but
it'll be more expensive.
It'll be, and it comes down to like supply and demand, right? It's hard to think about these questions in a static format because everything affects like everything else in a lot of ways. But like, yeah, you get like all else equal. If there is less of a supply of credit, then yeah, it's more expensive. But the way in which people are accumulating wealth and how they're capitalizing themselves, there's a lot of things that can also bring the demand for it down too. Yeah. So it's kind of like, where does the market settle in terms of price? And a lot of people look at it from that perspective, and it's kind of like, I have no idea, but like what I think a better way to look at it is rather than from like this bottom up view, from a top down view where you're like, okay, what's the total market size? Will there be some proportion of credit that exists? What will that be used for? And what I think the answer to that boils down to, like, there's some people who think like, I think if you like hear like really extreme Bitcoiners and they'll cite things like Jeff Booth's thesis, and they'll say, technology is going to advance so rapidly and productivity is going to be so fast, and Bitcoin's, when it's fully captured the market of money, is going to give people so much wealth that we won't need credit. And it's like, I don't really think that's true at all. I think that you can really reduce the amount of credit necessary. Like today in our system, we have this system that's, all credit, money is credit. So we're obviously at the furthest extreme for what credit could be. But I think that could be reduced very significantly. The question is, where does it come out to? And the reason that I think there's no way it could ever possibly go away is you think about it from like an entrepreneur's perspective. You have an expectation about the future. You want to go start this business. You think it'll be valuable to the world. And because of that, you're going to earn some sort of like economic yield. You're going to build value from creating this business. So you have to either finance that with savings, which Bitcoin will probably help quite a bit with. People have more savings. You'll probably see quite a bit more businesses that are organically financed by the savings of the entrepreneur. Certainly true. That's not going to be true in every scenario. There's still scarcity of resources. There's going to be a poor guy who's a genius who wants to go start this great business, and he's going to want to go get financing for that.
Well, there's also plenty of people out there who are very wealthy who still take on, still borrow money to start businesses.
Totally.
Because they want to spread the risk to other people.
Yeah, because we're incentivized to do it in our system. I mean, there's tax benefits from it. It's like that's one of the biggest, like whenever I get into this debate, this point comes up. We're fundamentally incentivized to take on debt. Like you should take on a mortgage of $200,000 and basically just like perpetually roll that thing over. Like there's so many advantages to doing that. So like whenever there's like really cheap debt and there's tax benefits to taking it on, then it makes a lot of sense to do it. But like if you hypothetically, if you like even remove that incentive, then it's like, well, why do you want to take on debt? And it's if I'm an entrepreneur and I want to finance my business, then I can choose equity or I can choose debt. Equity is effectively just perpetual debt. It's debt you have the rest of your life until you like buy the guy out. So would I rather give this guy ownership and decision-making over my business and have a perpetual liability with him? Or would I rather just have a liability that I have fixed for a period of time? I'm optimistic about my business. I know that I'll be able to pay it off at a certain point, in which case I still own the whole business. So like as long as there's a demand for a cheaper form of financing like that, there's always going to be demand for debt in some form.
And when you talk about the spectrum, you talk about your worst case scenarios. Bitcoin is gold, digital gold, gold 2.0,
right.
And your best case is apolitical global money. And that's what you're here for. Is that because if we were only digital gold, will you feel like we've missed an opportunity here? Is there something a little bit more ideological, like the way you see the world? We need this.
Yeah, exactly. Like if we don't make Bitcoin an alternative monetary system, then I struggle to see how we'll do it without some sort of new crazy invention that nobody else expected. So it's like we pretty much have to make it work this time. And if it's just digital gold, then we'll have some sort of potentially reserve standard system again, which is fine. But it's really not solving all the problems that we have.
And I wonder, or I worry with something like that, is that people would lose interest in it because there isn't a big enough mission behind it.
Right. Yep.
If we were just digital gold 2.0, this show kind of loses purpose.
Right.
It's like, what the fuck are we going to talk about?
The gold podcast.
It's going to be like the digital Peter Schiff show. It's boring as shit.
Yeah.
No, but it's just boring. It's like, what are we going to talk about? Like, there's nothing to talk about.
Gold went up 5% today.
Yeah. But if you look about the kind of shows we make right now, we're talking about energy markets. We're talking about nuclear. We're talking about the IMF, the World Bank. We're talking about malinvestment. We're talking about incentives around political cycles. We're talking about all the things where poor incentives allow that central ruling class to fuck everything for everybody else.
Yep.
And we all recognize Bitcoin as this kind of fairer system. And I mean, even to the point where Jason Meyer, do you know Jason Meyer?
No.
He's a guy who was on our show. He's a progressive guy. He's writing this book, A Progressive Case for Bitcoin. Really, really great guy. I keep telling him, you've written the most important book for conservatives. And the reason it's the most important book for conservatives is that if this is seen as a tool of the right, we failed. And so conservatives do not want to fight Democrats on Bitcoin. They want to work with them because it's money.
Yeah.
It's like fighting them on the dollar. So you've written the most important book for conservatives because conservatives should want Democrats to get it, understand it, and not fight about it.
Right.
Hence apolitical.
Right. Yeah. And like that's incredibly important. I think that when I think about all the benefits from it, I mean, the biggest thing that I see, here's what I think is like so unique about how it can change things. It's the question kind of becomes like, why do you want your government to be powerful? Because they provide your security. It's like kind of naive to a degree. If we were just to go undermine the U.S. government tomorrow, and if all their military power disappeared, now we're all huge at risk, and a bunch of horrible things could happen to my family. So I don't want that. What I do want is for all of the governments simultaneously to start to reduce their amount of power. And like, that's what's unique about Bitcoin is it creates a possibility where like, if we have some sort of massive currency run in 20 years, like, boom, that's how you do it. That's the only way to do it. And yeah, it's kind of crazy, and we got to make that work.
And in part of this, you've decided to kind of like nail down and start thinking about how, I say the banking system, it's really the entire financial system works. Like, what is the reality of this? And I guess during that period of we are here now, where we are with Bitcoin, $500 billion asset, lots of cool, interesting things happening, this future scenario, which may be 10, 20, 30, 50 years away. In between them, we've got parallel systems.
Yep.
But you are spending your time thinking about this transition to this pure Bitcoin financial system, pure Bitcoin banking system.
Right. And also, I think the next step is going to be for me to go deeper into like how that's bridged. So like, I'm trying to figure out the long term and where we could get to. And then that's obviously a very vague idea. But once you kind of have that end goal in mind, then you can start saying, okay, well, what technologies do I have today? What's needed to get those to the scale that's necessary to make the system happen? Then, therefore, these are the technologies that should be invested in today. So like, I have a little bit of understanding around some of that, and I have a few ideas, but there, it's endless amount of information and knowledge to start working on.
Well, you have to have a thesis of
Right. Yeah. So like my thesis is basically I expect or I hope for number one, that we have a market-based system. I think that that's just the most paramount aspect of how this all builds out, whether it's fractional reserve, full reserve, whatever it is. I just hope that it's chosen by the market of whatever it should be. And really it's like, Bitcoin has, three kind of primary problems. It's, transaction throughput, which Lightning is devised as a solution to, and we'll see if it gets to scale. And then we have privacy, which is another fundamental issue, and programmability, which isn't a fundamental issue, but it's been much slower than like the rest of the crypto ecosystem in certain ways, for good reason. But I think that, when I think about technologies that can benefit that, I think the Fedimint protocol actually has a very interesting proposition for how they can solve kind of the privacy and programmability aspect of it. And when I think about that, it's kind of like I bring this back to in the first chapter of my book. I talked about how throughout history there's always been multiple forms of money within an economy. So there's kind of this Bitcoin narrative that we would only have one form of money, and it's like, well, obviously it won't be crypto. Of course, that was an absurd proposition, but will it be, maximally one form of money? And I was always like, well, there's kind of three reasons. There's information opacity. And throughout history, it's kind of like, you're a tribe, you got money. Another tribe shows up, they got different money. I don't know how to verify your money. We're not going to use your money. And there's things like that. The internet today is like largely reduced a lot of that. And then the other big ones, like, today is sovereign coercion. We have a lot of currencies because it's in a government's interest to issue their own currency. So that's why we have so many. And then the last one's monetary utility trade-offs. So like from a fundamental perspective, thinking about money, there are trade-offs that exist. So when you think about the problems that Bitcoin has, how are we resolving that? It's like, well, Lightning Network's one. And it's funny because like, people refer to Lightning as Bitcoin. It's like, well, you can kind of make an argument that it's actually a separate, asset. It doesn't have the exact same properties as Bitcoin. Therefore, it is different. And it's more a semantic argument than anything. Like as long as markets practically view it as fungible with Bitcoin, then that's probably really all that matters. But like you can make the argument that, well, Bitcoin you can keep in cold storage, Lightning you got to keep in a hot wallet. So it already has different risk properties. You have, state channels that have a channel capacity that limits, how much you can actually send. Bitcoin doesn't have that. So it is fundamentally different in terms of how you can use it for the sake of its utility. That's why we had to create a separate network. And then you get into like eCash, which is used by Fedimint. And I think that, that could be another potential avenue for that because it solves like privacy and programmability. So it's like, and we can get into this, but like if, hypothetically that was something that emerged, then we'd effectively have kind of like three monetary mediums. And like, throughout history, we typically saw like dual monetary standards. So maybe we cut the semantics, call Lightning Bitcoin and say we have like a dual monetary standard. But nonetheless, there's problems that need to be solved, and we're solving them with currently two different networks. And if we had a third network step in, I think that could be potentially valuable. So my thesis right now, and this isn't like, I don't want to call it a thesis because it's not certain, it's a curiosity that I'm digging into. But I think that an eCash system of federations around the world is actually probably a viable optimization that could bring us to like a Bitcoin native banking system.